We're still in the stage of adoption where there is friction and there's prejudice and there's fear. You almost don't want them to figure it out too fast, because otherwise you're the stupid money. I'd rather be the smart money and wait for the stupid money to learn over the course of 5 to 10 years, because we need someone to be buying this stuff when it hits $5 million a coin, Anthony.
Welcome to Dream Richer. The crypto world has attracted many noble investors and large whales, from millionaires like Kevin O'Leary to trillionaires like Elon Musk. However, its popularity has never escaped the eyes of skeptics. From investors such as Warren Buffett and Charlie Munger, Bitcoin in particular has been critiqued for being nothing more than a fantasy bubble for those looking to get rich quick. In their words, Bitcoin is rat poison and worthless. Today, the billionaire Michael Saylor argues how he sees the Bitcoin adoption curve playing out. As he argues, we are currently in the adoption stage where we will see three things. Number one, friction. This means friction between parties of opposing views and even friction with other payment systems, namely the larger banks. Secondly, we will see prejudice. We have already seen this with banks closing the accounts of multiple crypto traders for simply dealing in crypto. And lastly, as Michael Saylor puts it, this current adoption will bring out fear. We are seeing this right now with crypto scaling down to low bottoms. As such, the whole market has entered extreme fear, according to the Fear and Greed Index. If you find the video helpful, then don't forget to subscribe. Let's get right into it.
If you roll the clock back to the entry of the Biden administration, the seminal event, Biden being elected, Biden has been very constructive with regard to innovation. If you look at the financial regulators that came in with the Biden administration, including Janet Yellen and Gary Gensler and the like, they're very informed, very constructive. If you actually, you could say this was a surprise, but if you looked at the written testimony that Janet Yellen gave while she was being vetted by Congress, while they were deciding on her appointment, she said pretty much the same words that she just said to Andrew in that 1 minute clip. She said, we need to responsibly regulate it, and this is a force for innovation and good and progress. And I think Gensler has said the same thing, and I think the other administrators, the other regulators have said the same thing. So I agree. I agree with the observation. Last week was a massive milestone, but if you were surprised by last week, you weren't paying attention for the past year and a half, because all of the indicators that the political system, the White House, Congress, and the Senate are pro-crypto and pro-Bitcoin in specific. All of those things have been there since the election. And I'd say what we saw last week was the President of the United States directing 18 government agencies to figure out how to embrace this new revolution, and reminding everybody that there are 40 million Americans that are pro-crypto and pro-Bitcoin, and there's nobody anti-trillion of money that needs to flow into this economy, and it's not there yet, and everybody is loudly endorsing it if you're listening. We could all agree that there's natural resistance to extraordinary disruptive change in the human civilization, and there always has been, right? Whether it's electricity or fire or explosives or internet technology or television or music. These kids are listening to crazy stuff on records. There's always that. But if we take a snapshot 3 years ago versus today you have the CEO of Goldman Sachs, the CEO of JP Morgan. You just had Larry Fink yesterday saying this is an idea whose time has come. You've got this rippling effect through all the big money managers, all the hedge funds, all the bulge bracket. 2 years ago, Merrill Lynch didn't, when I started buying Bitcoin, I called Merrill Lynch. They're like, well, we can buy you some gold. We can't buy Bitcoin. can't even talk about Bitcoin. We'll get fired. All 25,000 of our financial advisors will get fired for even talking about it. Now, those same people, they're sending me every week the indicia, right? The indicia of institutional adoption and the likelihood that the institution and the establishment embrace this has never been clearer than it is today. Let's say it's going to be a 36-month, 24-month, 36-month, 48-month delay before banks catch up, but smaller banks are offering Bitcoin services. The larger banks, not yet, but Morgan Stanley, Goldman Sachs, there are parts of those banks that are very reactionary and they push back. And on the other hand, another part of Morgan Stanley ends up owning $500 million worth of my stock, right? At the same time that the part of Morgan Stanley doesn't want anybody to buy your fund. And so these are not monolithic conglomerates, right? These tend to be massive organizations with 100 different divisions, each of them making independent decisions. And we win over a new individual, a new leader, a new executive division every month, and that'll continue for the decade, I guess. From 2022 to 2030, I think that's how long it takes for a lot of these major financial institutions to rewire their thinking and their plumbing and their risk controls.
It was easy to predict a $100,000 Bitcoin price late last year, when it was still coming off its latest all-time high in November. However, with Bitcoin's big fall since then, the prediction game is even trickier. The most extreme crypto skeptics say Bitcoin will tank to as low as $10,000 in 2022, but a middle ground might be to say the cryptocurrency can still climb to $100,000, like many experts predicted late last year, just on a slower timeline. But now, bullish experts are reevaluating the crypto industry altogether as major corporations like Nike and other big brands are looking at ways to monetize their products in the digital metaverse. The rise of metaverse games, worlds, products, and experiences is increasing the popularity of altcoins, which has changed investor sentiments about Bitcoin, which was known as the original crypto. Do you think Bitcoin will remain standing until the end?
I think the sovereign wealth funds will come first. I mean, the first adoption will be any sovereign wealth fund like UAE or Saudi Arabia or Norway or Switzerland that would hold big tech stocks. If you would hold $10 billion worth of Apple or Google or Facebook or Amazon, I think some of those will roll into Bitcoin because it's just another tech investment for them, and it's totally within their mandate. I think that some countries are being forced to consider other payment options. I mean, like the Russians are being forced. If you get kicked off of SWIFT, if people were rational, I don't think they are, by the way. Luckily for us, 98% of them aren't, because you couldn't be in the top 2% if everybody else was as smart or smarter than you, could you? Right? So I guess they're not really totally rational, but if you were rational, the obvious thing to do if you're an export country is you start exporting in Bitcoin, and then you sweep your cash flows into Bitcoin, and then you probably make like $500 billion or $1 trillion because you did that. If you're the first mover, who will do that? Well, I mean, why wouldn't you do that? By the way, why hasn't Apple bought $20 billion of Bitcoin and made $100 billion overnight yet? The answer is they're afraid, and they have political constraints. They're afraid of their shareholders. The accounting makes it ugly. So, you wonder, why don't they just bend over and make $1 trillion? Remember when I tweeted to Elon, I said, I didn't say buy $1 billion worth of Bitcoin. I said buy 10 billion worth of Bitcoin and then issue $10 billion of converts and buy 10 billion more, and you make 100 billion, and then all the S&P follows you and you make $1 trillion.
It's clear from Michael Saylor's explanation that Bitcoin will not go away anytime soon. In June 2021, we saw a similar Bitcoin crash to what we are seeing today. At that time, we saw the market behave exactly like we are seeing it do today. Investors had entered in a stage of extreme fear and were looking more bearish than ever. Currently, the crypto world stands divided, with some arguing that Bitcoin will break support and crash even more. All the while, some remain bullish on Bitcoin's performance. arguing that it's only a matter of time before it reaches all new time high. With that said, there are many reasons as to why any crypto crashes. These include 1. Crypto investors taking on too much leverage. 2. Lack of liquidity in cryptocurrency markets. 3. Crypto security breaches that end up causing fear. 4. Crypto influencers causing volatility. 5. Cryptocurrency correlations with the stock market. And finally, number 6. Crypto's correlation to geopolitical situations. To learn more about the latest crypto news, watch these videos here.